Hello, trading is closed on November 8th, 2016. We had a few calls yesterday. The first one was that we should have a sizable drop of 8 to 10 points occurring at some time during the day. I said I thought there was a high likelihood it would occur from the open. The high yesterday was 21.32. This low here was 21.23.56. So that's close to 8.5 points, which is within the 8 to 10 point parameters. From here to here, we had a straight line drop of about 9 1/3 points. So either one of those satisfied the prediction. I also said that this didn't preclude a higher close and that the pattern was one which tended to rally into the close, but I wasn't making any prediction as to whether or not that would happen. That was the pattern we got. It didn't rally into the close, and typically if we don't have a gap up tomorrow and overtake this high, it leads to further weakness. Here was today's trade. Early on, MEJT said ultimately higher prices would print. They did. Said this drop was false. It was. Said prices would return to this line, which they did. Here's a MEJT resistance area, and we dropped right from that area. There's an optional target from the morning pattern that says 2124.78 will print. If it doesn't print tomorrow, I'd forget about it, but it does work about 95% of the time. So if we don't have a gap up, here's the target with a high likelihood of printing. That isn't all the trouble from today's trade. If you look at various time frames, you'll see our TDST lines here have provided resistance on the half-a-day chart. On the 130-minute chart right there, and on charts for other time frames also. So we've had a rally to resistance and then stalled. Gapping over this high would invalidate the negative aspects of the formation. And you might say because futures rallied over it promptly, that should happen. It's quite the opposite. If we have all day long to rally over this high and only do it the instant that the big money, the smart money leaves and stops trading, which is after the close, it typically means the public is going long and the smart money isn't. This had been the wave count I was using. Wave counting isn't my long suit, but I think this is a more likely count and that this was the end of wave B for this reason. Here's a wall. Here's a hole in the wall gap. These things usually fill pretty quickly. It hasn't filled yet. This is 5 waves up. It implies it's an A or a C of some degree. If you look and you set this as wave C, you'll see that this is an A, a B, and a C. You'll see a beautiful Fibonacci relationship right there between A and C. You'll also see if this is large B, it's exactly 50% of A. So because of all these relationships, I think this is A and this is B. I think wave C down is coming. And if it's equal to wave A, we will just undercut these lows, which is required from the hole in the wall gap formation. Here are some of the fib relationships. So, unless we have a gap up and take out this high, which is always possible, but I'm not predicting, I look for a drop tomorrow. Here's the target. That's a target. It's not a stop and reverse level, and we could go lower than that. We'll know at the open if we get the invalidation from the gap up. If not, that's my call, and that's today's call.